Hundreds of billions in crypto are locked out of DeFi right now. Bitcoin, XRP, Dogecoin, these assets were not built for smart contracts, which means they cannot work for you. All that value just sitting in wallets. And while Ethereum and Solana get all the attention, these dumb assets represent some of the largest market caps in crypto. Just sitting, waiting. FLR wants to unlock all of it. And they've got the Nasdaq-listed companies, Google Cloud as a validator, and a pending ETF filing backing them up. Today, I'm breaking down exactly what FLR does, the real bullish signals behind it, the risks nobody's talking about, and the exact math on how many tokens you would need to retire a millionaire from this one. Before we begin, it seems like many of you watch and enjoy the content but haven't subscribed yet. So, if you haven't done yet, now's a good time to click that subscribe button and help the channel grow. Let's get into it. This is not a financial advice, always do your own research. FLR Network launched its mainnet on July 14th, 2022, with the public token distribution event following half a year later, on January 9th, 2023. The project was founded by 3 University College London alumni, Hugo Fillion, Sean Rowan, and Dr. Nairi Usher. They raised $57 million from VC funds like Kinetic Capital, Digital Currency Group, Coin Fund. But what does the project do in plain English? Well, the FLR network is a blockchain that specializes in blockchain interoperability, which means connecting separate blockchain ecosystems that typically cannot communicate with each other. Think of it as a universal translator that allows Bitcoin to talk to Ethereum or XRP to interact with Dogecoin. FLR does this with 3 core superpowers. Consider them the pillars holding up this incredible network. First, we have F assets. This is FLR's answer to unlocking those dumb assets we spoke of. F assets turn non-smart, contract-enabled cryptocurrencies like XRP, BTC, DOGE into assets that can be used in DeFi, securely, at scale, and with full custody retained. F assets is now live on the FLR mainnet, starting with FXRP. Now, XRP is not just a payments coin any longer. For example, with the help of Firelight and more markets, you can earn sustainable rewards by providing insurance coverage to DeFi protocols, essentially staking XRP to secure DeFi, while earning fees from protocols that buy that protection. Next, the FLR Data Connector. It brings reliable, secure, and verified data from other blockchains and the internet to power smart contracts on FLR. This is FLR's direct line to truth, if you say so. It allows FLR to verify events on any other blockchain or even from real-world Web 2 APIs. This opens up entirely new categories of decentralized applications, what FLR calls smart contracts for data. And finally, the third pillar, the FLR Time Series Oracle, or FTSO. It is an enshrined oracle that provides decentralized data feeds to FLR. It leverages FLR's full economic security to deliver fast, cost-effective, and manipulation-resistant data feeds for crypto, equities, and commodities every 1.8 seconds. After all these F somethings, let's look at FLR's tokenomics and see how you would rate it then from F to A+. The FLR token is designed to reward active participation rather than passive holding. With a hard cap of 100 billion tokens, the supply is managed carefully to prevent sudden sell-offs. Only 15% of the public tokens were released to the XRP airdrop holders at the start. The remaining 85% are distributed monthly over 3 years, but only to users who actively wrap their FLR tokens. This ensures rewards go to committed community members, and the last distribution takes place very soon, on January 30th, 2026. To keep the network running, FLR introduces new tokens at a declining inflation rate, starting at 10% and dropping to 5%, which pays the providers who supply accurate data to the network. Additionally, the team recently burned 2.1 billion tokens to reduce excess supply. Ultimately, FLR is a utility token used for transaction fees, governance, and earning rewards, focusing on long-term ecosystem health. Something about the network performance and the ecosystem growth of FLR grabbed my attention quite seriously, and I don't want you to miss it. See, FLR doesn't compete on raw transaction speed, but on data accuracy and trustless verification. The network handles thousands of price updates per block through the FTSO, with 140 infrastructure providers contributing to every single data point. This decentralized approach ensures high-integrity data feeds without relying on third-party oracles. Real-world partnerships are accelerating. Nasdaq-listed VivoPower committed $100 million in XRP to this system, while publicly traded Everything Blockchain Incorporated became the second institutional adopter. Flare's total value locked hit $207 million recently in November 2025. Over 50 million XRP has been bridged from the XRP ledger, positioning Flare as XRP's primary DeFi hub. From this quarter, FLR has joined the Coinbase 50 Index, a benchmark tracking the performance of the top 50 eligible digital assets listed on the Coinbase exchange. A few months ago, in August 2025, Flare integrated with Layer 0 V2, connecting to over 75 blockchains including Ethereum and Solana. They partnered with Google Cloud as network validator and contributor to the FTSO. Also, over 800 million registered users can now deposit, swap, and stake FLR directly within Telegram. More recently, in October 2025, Teucrium filed for a FLR ETF with the SEC, signaling institutional confidence. The network has processed over 300 million transactions since launch, with consistent uptime and reliability. As always, decentralization is one of my key concerns when it comes to crypto projects. Let's see how Flare does on this front and look at some other risk factors as well. The Flare governance runs through community-approved FIPs. 140 independent organizations secure the network and operate as FTSO providers. In terms of price risk, the Flare drop ends in January 2026, removing monthly sell pressure. After that, burn mechanisms and reduced inflation make the token more deflationary. Yes, early token concentration was a valid concern, but backers voluntarily extended vesting and even burned portions of their allocations. Team and investor tokens also had restricted selling windows during early distribution, so early dumping realistically was not possible. The main risks that I see though are 1. The F assets, which is the most innovative but also the riskiest part. A bug or collateral failure would damage trust fast. And 2. Developer adoption. The thing is, Flare must attract real builders to challenge existing Oracle and bridge dominance, and I'll expand on this in just a moment. But to conclude with the risks, I would say the bridging risk is lower than competitors because Flare uses no multi-sigs, no councils, and no off-chain custodians, but the smart contracts risk still exists. Now, let's compare Flare to the Oracle market leader, Chainlink. The undisputed giant in the space has a market cap of $10 billion, supporting over 360 protocols. Flare, on the other hand, has a much more modest market cap of $1.1 billion, and the project is mostly focused on XRP-Fi ecosystem. Chainlink brings off-chain data, yes, but it also uses off-chain oracles and aggregators. In contrast, Flare brings trustless, on-chain verified data. Chainlink's most demanded feed has 31 providers with no staked capital. Flare has 140 infrastructure providers, each contributing to every price feed with staked FLR. The leader amongst the oracles charges fees for data feeds, with costs varying by blockchain. At the same time, Flare offers much of its data for free, since validators are also data providers, with costs covered by network inflation. Chainlink pays node operators for data delivery, whereas Flare secures the network through staking, rewards data providers through delegation, pays transaction fees, and serves as collateral in DeFi applications. Here's the bottom line. Chainlink is the established, widely adopted third-party Oracle standard. Flare is the newer, cost-effective, enshrined Oracle Layer 1, focused on unlocking XRP and Bitcoin for DeFi. Both of these can coexist, serving different use cases, but Flare must prove developer adoption to justify the higher valuations. So, lots of great and bullish news about Flare, but let's see the price action and how many tokens would we need to retire as millionaires from Flare. Since launch, the price has been dropping, losing 93% of its value. Let's face it, that's no dream launch by any stretch of the imagination. But it was largely due to the massive initial sell pressure created by the airdrop to XRP holders, which coincided with its launch during a deep crypto bear market. All this after years of development delays. Then, as the overall market started pumping again, FLR gained 1,000%, hitting an all-time high of 5.5 cents. And right now, the price is sitting at 1.4 cents at 75% discount and at a crucial support. The market cap is at only $1.1 billion with a circulating supply of approximately 79 billion FLR out of a total future supply projected at 110 billion tokens after all distributions and inflation mechanisms are complete. It's about 71% currently circulating, so keep that in mind. But look, this is a serious project with great technology behind it, and there's no denying that exactly when projects are at a discount and when nobody's talking about them on X, that's a great time to start accumulating. But once the price starts reaching new all-time highs, people will flood in. So let's see how many tokens now we would need to buy before this time comes to retire as millionaires. The bearish scenario is if FLR reaches the previous all-time high at 5.5 cents. That would put us at 4x from today's level. And the amount of tokens required would be 18 million. Sounds like a lot, I know. And indeed, it would cost us a bit, about $250,000 right now. Well, here comes the base case scenario, with a bit more optimism, I'd say. That's when FLR reaches the 10 cents region, possibly even breaks this psychological barrier. This would mean a lucky 7x from the price right now. We would then need to buy 10 million tokens, setting us back the more bearable $140,000. And now for the most anticipated, opium-infused bullish scenario that we long for. The key target is 55 cents apiece. That's a mouth-watering 39x gain, which is not bad at all. To reach that millionaire status we're after, we'll have to buy over 1.8 million tokens, which come at the quite affordable $26,000 given today's price. But I get it, not everyone has 26k to dump into an obscure altcoin overnight. Yet, despair not, because you can always start dollar cost averaging like $100 a week, and in 5 years time, that's $26k in FLR right there. It's a long shot, I know, but still the chances of retiring as a millionaire are drastically higher compared to if you had just saved $26,000 and kept them stashed under your mattress. So there you have it, guys, the breakdown of FLR network and the millionaire math, the way you like it. Whether FLR hits $1, $5, or even $10, the potential is undeniable for those who understand its unique value proposition. To me, this isn't just about chasing pumps. Rather, it's about investing in a foundational technology that could redefine how all blockchains and even the real world interact. But what do you think? How high do you see FLR going in the foreseeable future, or even beyond that? Let me know your price predictions in the comments below and see who, if anyone, gets it right. If you enjoyed this breakdown of FLR, smash the like button and subscribe to the airdrops.com channel so you don't miss our next video on the project that could take you from rags to riches. I'm Stan, thank you for watching, see you next time, ciao.